Corpbiz.
Hello everyone, this is Yash Saxena and you are watching Corpbiz. Today in this video, we are going to talk about the Credit Guarantee Scheme for Startups, CGSS. So what is Credit Guarantee Scheme? Let's talk about it. This scheme would help provide much needed collateral-free debt funding to startups. The credit guarantee cover under the scheme would be transaction based and umbrella based. The exposure to individual cases would be capped at rupees 10 crores per case or the actual outstanding credit amount, whichever is less. The scheme has been approved for the purpose of providing credit guarantees to loan extended by the member institutions to finance eligible borrowers being startups. Member institutes include financial intermediaries like banks, financial institutions, non-banking financial companies engaged in lending or investing and conforming to the eligibility criteria approved under the scheme. This scheme would help provide the much needed collateral-free debt funding to startups. In respect of transaction-based guarantee cover, the guarantee cover is obtained by MIs on a single eligible borrower basis. Transaction-based guarantee will promote lending by banks, NBFCs to eligible startups. The umbrella-based guarantee cover will provide a guarantee to venture debt funds (VDF) registered under Alternative Investment Funds Regulations of the Securities and Exchange Board of India (SEBI). The aim of this scheme is to support startups that are hit hard by the pandemic and are now going to be impacted further by the rising interest rate scenario when liquidity is unlikely to be easily available to new entrepreneurs. Now let's move forward with the topic and discuss who is eligible to apply for a credit guarantee scheme for startups. First are DPIIT recognized startups. Startups with stable revenue stream as justified by the audited monthly statements over a year, capable of debt financing. Startups that are not earmarked by the lending investing institution as credit defaulters. Startups that are not classified as NPA or non-performing asset as per the Reserve Bank guidelines. Member institutions approved startups. According to Credit Guarantee Scheme for Startups 2022, the following lending institutions can lend credibility to eligible startups across the country: scheduled commercial banks and lending institutions, RBI registered NBFCs with a minimum net worth of rupees 100 crore and having a BBB rating and above given by the RBI accredited agency. If some institutions encounter a dip in their rating in the future, they will no longer remain eligible for further guarantee cover. However, once they manage to acquire the desired rating, they can continue granting the same. SEBI registers AIFs, that is Alternative Investment Funds, are some of it. Now, let's move on to the norms around the guarantee fee to be paid by the MIs. For transaction-based guarantee cover, to secure the guarantee cover, the MIs shall pay AGF of 2% of the outstanding disbursement amount to the trust for the date of CGDN, that is Credit Guarantee Demand Advice Note of the guarantee fee. For startups in Northeast regions and units handled by the female entrepreneurs, the MI shall pay AGF of 1.5% of the outstanding amount to the trust from the date of CDGAN. The estimation of upcoming AGFCs would be based on the outstanding loan venture debt at the commencement of the financial year, an additional grant made during the first and coming out of the overall approved amount on the pro rata basis. A commencement of the guarantee would come to life on the day when the MIs credit AGF's proceeds to trust bank's account. The AGF renewal would come into effect only after the MIs pay out required amount to the trust bank. For umbrella-based guarantee cover, to secure the guarantee cover, the MIs shall pay a fee in the form of ACC, that is annual commitment charge of 0.15% of the intended pooled investment in the startup to trust within 30 days from the date of CGDAN. Note of the commission charge: an additional guarantee fee should be paid on the time whenever the proposed investment threshold is extended to what was proposed earlier. The estimation of imminent ACCs shall be based on the pooled investment in startups of VDF, and for guarantee cover, MIs should pay the ACC within 30 days or before April 30 of every year till the entire tenure of VDF. ACCs remitted by the venture debt funds are non-refundable. Member institutes shall pay 1% of the pooled investment as one-time guarantee fee at the time of request of guarantee claim. If MI doesn't entertain any claim, it shall pay 0.25% of the pooled investment as a guarantee of closure expenses within 30 days of the closure date of VDF. The Credit Guarantee Scheme for Startups 2022 has the potential to significantly benefit the startup ecosystem. The scheme will hasten the influx of new business ideas that require funding to thrive. The Government of India has taken a positive step in providing much needed financial support to financially disadvantaged startups. The scheme has the potential to make startup funding more viable and transparent. So, this was all about the topic, and for more such content, keep watching Corpbiz. This is Yash Saxena signing off.